All right, awesome. Good afternoon, everybody. Whoa, it's a little loud. My name is Graham Ferguson, and I serve as the head of ecosystem at Securitize. I am honored to be here visiting Seoul all the way from New York. I got into crypto a few years ago because I saw the opportunity to be early in connecting the world of traditional finance with digital markets. I've had the privilege of helping scale blockchain platforms like Say and Omni from early venture-backed startups all the way to global ecosystems. And now at Securitize, I get to work alongside some of the most respected financial institutions in the world. Names like BlackRock, KKR, Apollo, Van Eck, Hamilton Lane, and others to bring tokenization into the financial mainstream. Like I said, it's an honor to be here in Seoul. Korea has always been known as one of the most forward-looking markets in technology, whether in gaming, mobile, or crypto adoption. Today, I want to share how tokenization is reshaping capital markets globally and why Korea is uniquely positioned to lead in this next chapter. So let me start with our story. Securitize was founded by our CEO, Carlos Domingo, in 2017 with a bold mission to make regulated tokenization of financial assets a reality. At that time, stablecoins didn't exist, tokenization was mostly just an idea, and the term RWA had not yet been born. There were experiments, but nothing built for institutions. No regulatory framework, no investor protections, no infrastructure that the world's largest asset managers could rely on. So we became the first SEC registered transfer agent for digital asset securities. That milestone was critical. It gave regulators, asset managers, and investors confidence that tokenized securities could exist within the rule of law. We were also among the very first platforms to issue tokenized securities at scale, creating a repeatable, scalable model for compliance, onboarding, and secondary trading. And we didn't stop there. We built the entire regulatory stack: an SEC-registered broker-dealer, an alternative trading system, or ATS, and a fund administrator. All of this was intentional. For institutions, tokenization is not about buzzwords or hype. It's about trust, efficiency, and access. We saw the vision early. Capital markets would eventually move on chain. We also understood that this is not a process that would be executed overnight. This is something that is taking years, and it's because we have done it the right way in tandem with regulators every step of the way. Our role was to make sure that when markets began to move on chain, there was a trusted, regulated platform ready to serve global finance. So fast forward to today, and the results speak for themselves. We are the exclusive tokenization partner of BlackRock, the largest asset manager in the world. When BlackRock wanted to move a fund on chain, they took their decision seriously. They knew that their decision would impact their business and also crypto for years to come. They could have worked with any fintech or blockchain company, but instead they chose Securitize. Together, we launched the BlackRock USD Institutional Digital Liquidity Fund, or BUIDL. That fund has now grown to nearly $3 billion in assets under management and is the largest tokenized fund in history. It showed the world that tokenization is not just experimental, it can be scaled by the most trusted brands in global finance. Now with Apollo, one of the world's largest alternative asset managers, we've tokenized access to private credit, one of the fastest growing asset classes. Traditionally, private credit is closed off, it's exclusive, locked away for only the largest investors. But tokenization changes this. Through ACRED, we've made Apollo's strategies available and accessible in an on-chain regulated format. We will continue this trend, tokenizing a healthcare growth fund with KKR and a senior credit fund with Hamilton Lane. We also just launched a tokenized Treasury fund with Van Eck, one of the most innovative ETF issuers, in our mission to bring yield-bearing, low-risk assets into the digital ecosystem. We are excited to continue our work of bringing historically private products to the public. And in total, we've enabled over $4 billion worth in tokenized issuances. And we lead in every major category. We're number one in tokenized treasuries with BUIDL, number one in tokenized private credit with Apollo's ACRED, and we've launched 5 funds with over $100 million. This isn't just a list of partnerships. It's proof that the world's leading asset managers trust Securitize to take their first step into tokenization. When institutions like BlackRock and Apollo choose you, it sends a message. This is not a fringe experiment. This is the future of capital markets. So why does this matter? Well, it's because the opportunity is enormous. The tokenized real-world asset market today is already worth about $26 billion. That's That's double what it was just a year ago. And if you include stablecoins, that number grows tenfold. But these are still early days. Consider the projections from major institutions. Standard Chartered estimates $30 trillion of tokenized assets by 2034. BCG estimates $16 trillion worth of tokenized liquid assets by 2030. Citi estimates $5 trillion of tokenized digital securities by 2030. And the total addressable market across equities, bonds, stocks, real estate is nearly $400 trillion. Now, regardless of where these estimates are, it almost doesn't matter, because even the most conservative of these is hundreds of times bigger than where we are today. And the momentum is real. Larry Fink, CEO of BlackRock, said the next generation for markets, the next generation for tokenization, for securities, will be tokenization. Robert Grayfield, the former CEO of NASDAQ, put it even more bluntly. In 5 years, 100% of stocks and bonds on Wall Street will be tokenized. Why? Because tokenization delivers concrete advantages. Accessibility. Investors can access assets that were previously out of reach. Instant settlement. It reduces counterparty risk and operational drag. 24/7 markets. Capital flows are no longer bound by banking hours. Composability. Assets can interact programmatically with DeFi, creating new yield strategies. And global reach. An investor in Seoul can access the same exact product as an investor in New York instantly. Now think about Korea. Korea has one of the most engaged investor bases in the world, both retail and institutional, a market primed for tokenization. The Korean market has always been a leader in rapid adoption of new technology. You led the world in broadband, in mobile gaming, in crypto trading. The same dynamic will play out in tokenization. Korea isn't just positioned to adopt, Korea is positioned to lead. Now, none of this happens without regulation. At Securitize, we know this very well. In the US, regulators are starting to embrace tokenization as a permanent fixture of capital markets, and the SEC's Project Crypto has explicitly acknowledged the role of tokenized securities. And we have been to the table, participating in SEC roundtables and policy discussions, helping bridge the gap between traditional finance and DeFi. Even commissioners like Hester Pierce and Caroline Atkins have spoken openly about the need to support innovation in tokenization. And Korea is moving in the same direction. The FSC is not just observing, they're actively updating frameworks and starting to signal support. The regulatory tailwinds are finally coming. So what does this look like in practice? Let's talk about some use cases. Take BUIDL, our on-chain US Treasury fund. For the first time, a regulated US Treasury product is being used as collateral in DeFi. That means investors can deploy one of the safest, most trusted assets in the world in decentralized markets. BUIDL can also be held and used today as collateral in centralized exchanges such as Crypto.com and Deribit. In DeFi, take ACRED, Apollo's tokenized private credit fund. Historically, access to private credit has been gated, but now it's being bridged into DeFi, unlocking new yield pathways for a broader set of investors. And finally, looping, a common DeFi strategy where an investor can deposit an asset as collateral, borrow stables against it, and reinvest into that asset for additional yield. These types of opportunities require extensive coordination across a bunch of different parties: asset issuers, tokenization platforms, vault infra providers, curators, risk managers, and the like. As you can see, we are live with assets on nearly all of the major blockchains and partner with many of the largest DeFi protocols. It's our goal and mission to continue working with our partners to close this gap between traditional finance and crypto. These use cases show why tokenization isn't just theory. It's live today, it's changing how liquidity flows, and it's unlocking entirely new financial dynamics. So let me close with this. Securitize is not just building products, we're building the infrastructure for the next generation of capital markets. And Korea, we believe, will be a critical part of that journey. You have world-class investors, global banks, and regulators who are forward-thinking. That combination makes Korea not just a participant, but also a leader. So I'll leave you with this. Tokenization is coming. We're still very early, and the trillions ahead will dwarf what we've done so far. Thank you.